and get you guys on the right track. Oh, somebody says, in case you want to pass along quant freezing, shadow support recommend upgrading from 4 gigabytes to 8 gigabytes. Got it done fast and it was only $100 including installation. Yay! Good job, Kathy. Yes, for those people who only have a 4 gig computer, the newer ones are starting to come with 8 gigs. It's good to have more memory. Or just have your Segredo Quant on a second computer. Made 900 in gold today, but still not able to trade without the 1 minute chart. Well, the 1 minute chart's not such a bad thing, especially for gold. Volatile markets like crude oil and gold, you want to have a 1 minute chart because those changes in one bar, it can move 20 ticks, and you want to be able to see the things real close, and you want to see those fast changes. Therefore, you need a 1 minute chart. But for markets like currencies, and NG, a 1 minute chart can sometimes fake you out because you lose sight of the bigger picture. So you need more of a 3 minute, a 5 minute, and a 15 minute. So you need your medium term and your long term views rather for trendy markets, okay? So on volatile markets, you want to stick with a short term. Segredo training on Wednesday nights. Yes, we are starting a new class for you guys. Cheryl's taking a little bit of a sabbatical right now. She's got a lot going on. But we are replacing that class with a Segredo class. Now, it's not to say that I'm not going to be talking about Segredo, but in the Wednesday class, that's all they're going to be talking about is the Segredo. So they're not going to be covering the Ninja. So what I will do is show you how to connect the two so you can trade with both sides of the coin. Excellent, excellent. All right, so let's get going here. There'll be Segredo classes on Wednesday nights? Yes. So like I said, I will still cover the Segredo, but if you want additional training on Segredo, then go to the Wednesday night classes. They'll cover some more stuff. Every Wednesday night, 7:30 to 9:30. It's Cheryl's class. She has taken some time off, and so we're replacing her class with a much-needed Segredo class. And then I will continue with the technical analysis with the Ninja, and also be talking about Segredo. Who's doing the Wednesday night training? A gentleman. I'm not sure. You'll hear this week. Can anyone listen to the Wednesday class? Yes. Oh, even if you've not bought it yet. Yeah. Look, you guys are Shadow Traders members. The fact that you're in my class tonight means you can go to the Wednesday night also. If you don't have the Segredo, you can still attend the class. And when you're ready to subscribe, you just go to the Segredo website and pay the $100. All right, so let's get going on because I got a lot to cover tonight. And the first thing I want to talk about is I want you guys to go to your self-paced course. In your self-paced course, there's a section called Section 5, Putting It All Together. And in Section 5, it goes over the main strategies. If you go back through here, if you click on the icon here, oops, you go to Section 5 on your Shadow Trader self-paced course, and in here where it says Putting It All Together, I want you to click in there. This is a great section because it tells you about the different strategies. You know, once you've learned all the indicators and everything else, sometimes it's all a bit much, and it's not so easy to connect all the dots. Okay, so it's nice to be able to put it all together, and I'm going to tie a few things together for you tonight. Any random questions that you have, guys, save till the end. I will give you some extra time to answer your questions, so just sorry, messing this all up. Come on now. All right, let's do this again. All right, so double bottom. If you continue through the pages, double top. So it goes through, it shows you diagrams plus written, lower high, higher low, bullish 13 gap fill, bearish 13 gap fill, 200 SMA bounce. These are our actual strategies. So even though we talk about the basic clear trade, gap trade, you can actually break them up into different strategies based on the different interactions of the indicators. So like I've always said, there are self-organizing patterns that repeat themselves in the market, and we talk about a basic trend trade, a basic counter trend trade, because there are in fact only 3 positions in the market. And so, but let me just show you a chart, so I'm not just giving you something verbal. Okay, so there are actually only 3 positions in the market, and this is true for all markets, which is why shadow trader strategies, you can trade with futures, forex, options, and stocks. Any market, the rules are still the same. So if we're looking at the market, if you'll see right here, the price action is clear of our trend line, so we call this a trend trade, and this is our basic clear trade strategy. And then when the price action is reversing and closing the divergence that's created from the trending, the clearing, we call that the gap trade. So when we talk about a 13 EMA gap trade, we're talking about the 13 moving average, which is the green line, and when the price closes the gap, it's called a gap fill strategy. Now, we've only got 3 positions in the market. You're either trending, you're either counter trending going into your trend lines, or you're simply going sideways, which we call a fist. Okay, well, you see when you very dangerous to trade when you're in a fist, when the price is sandwiched between your trend lines, because it will just whipsaw on you. So you must wait for price action to either clear it or simply do short finite gap trades with a short target, and we call that our scalping strategy, which is usually about 3 ticks inside of a 5 or 6 tick move. So but at the end of the day, we're talking about those 3 strategies. But that doesn't mean to say you can't time your clear trade or your gap trade based on different interactions with indicators. So that's what section 5 actually shows you. You go through that section, you talk about the this one, the 100 moving average cross. So when the 100 moving average crossing, the market's going to continue in a bearish direction. If it's crossing up, it's going to continue in a bullish direction, or bouncing off the 200, the gap trade bouncing off the 200 SMA. So when the market interacts with different indicators, we have these strategies coined for you, so you can follow along. And when you see these things show up, if you learn these strategies, you go, oh, I've got an opportunity, I've got a 200 and 100 moving average cross, or I've got double top, or a lower high, or a higher low, and so on. So I'm going to just quickly, the main one I want to show you, because tonight I'm going to be talking about the timing of trending. Okay, here's a bullish clear trade. Oh, let's see if I can do this. Can I do this? We should make it a little bigger here. Okay, so as you can see, there's the arrow pointing to the touching candle. There you go, that's better. The touching candle bouncing off the 13 EMA, that is your bullish clear trade. So every time the 13 EMA bounces, it will bounce off the 13 EMA. So go through that section 5, but we're going to be talking about the trend trade. Now, let me just close this for a minute here, and I'm going to define the trend trade a little further for you. Now, what you have learned up until this time so far, and for those of you who are new, going to follow along with me here. Okay, so what we're going to be what you've been following up until now is we've basically covered two main strategies, right? Because everybody needs to learn this terminology. The terminology I'm going to use tonight is simply this. Let me just draw this for you so you can see it clearly. Obviously, I've just mentioned the clear trade. As you can see based on that diagram, it always starts with the candles bouncing off the 13. So think of it as the ball leaving the bat. And then we have what's called closing the gap to the 13 EMA. That's our basic counter trend trade. Now, in the world of gap trading, there are two types of gaps or two types of counter trends. There is the one that is short-lived, because the trend is so strong, it closes the gap, but the trend then continues a little further. And when it does that, we call that a retracement gap trade. So we use the term retracement for short. So as you can see here on retracement trades, we use the MACD to show that it's diverged, therefore the market is not really ready to change direction. Now on the second gap trade, the one down here, notice that it closed the gap, but it continued, and the 13 EMA crossed and the market reversed direction, switching from bearish to bullish. Now we call that a reversal, or we call it a perfect trade. Those are the two catchphrases we use, reversal or perfect trade. And you notice that on this cross, when you see the MACD is crossing as well, and it doesn't have to be the exact timing, but more or less in the same time window, you will see that the stows, especially when the stows are really tight together at the top line or the bottom line. The bottom line is your 20 line, and the top line, the green line, is your 80 line. So that represents overbought or oversold. So if it's on the bottom, it's oversold. If it's on the top, it's overbought. And when it's lined up like that, can you see that alignment? We call that the perfect alignment. That's the perfect counter trend. What does a diverged MACD look like? Well, you can see where my circle it is. Can you see that the blue line is, it looks like a fat snake. So that's a diverged MACD. And on every retracement, look here, here's another retracement. On every retracement, you will see most of the time the MACD looks like a fat snake. Can you see that? The blue is spread apart as opposed to a skinny one getting to a cross. More room to go. Yes, there's still air. So anyways, now that you understand the basic terminology of either we're talking about a clear trade where the price is clear of the moving average, or we're talking about a retracement, or we're talking about a reversal or a perfect trade if it has the alignment of the MACD and stows. Not every reversal has the alignment of the MACD stows. So understand that, you know, when you do have it, it's going to be nice. Now, for those of you who attend Barbara's sessions, we must understand that even though the strategies are coded by Barbara, and she's the real brains behind the operation, Barbara as a coder is one thing, and Barbara as a trader is another. She likes to do the counter trends. You know, I call it the left brain and the right brain thinkers, because I find that all left brain thinkers tend to be counter trenders, and all right brain thinkers like myself, I'm an artist, so people who are more artist types and sales manager types, people who have to solve bigger problems all the time, they tend to be more right brain thinkers, and they tend to go with a bigger picture, so they like trend trading more. So you're going to play with both strategies to figure out which one you favor more or feel more comfortable with, and you're going to find very quickly that you like one or the other. Now, it's not to say that you can't do a little bit of both. And you'll see in my videos in the members download section, there's a video called the cookie cutter strategy, the cookie cutter plan. And if you go watch that video, it's a dated video from like 2006, but it's still the same concepts And you'll see that I show you a nice way of doing a little bit of both. Now, because she's a counter trend trader, Barbara, she's going to talk about trending on this perfect trade. So let me just clarify something. Our clear trades are clear trades mostly with the main trend. Yes, they are, but let me just clarify, because that's a good question. Are clear trades mostly with the main trend? Okay, so you're going to hear this terminology thrown around, trending, a lot. Okay, you're going to hear Barbara talk about when the MACD and the stows align, and you'll see here it aligns with the 13 EMA cross. Even though this is a reversal trade, she's going to say it's starting the new trend in the new direction, which is true. Okay, this is correct. But what she's going to use is a 5-minute chart to line it up. So when she says, what she'll say is, you'll hear this in the chat room, she'll say something like, when the MACD and the stows are in sync with the 5-minute chart. So in other words, a 5-minute chart, the MACD is at the below the center line. There's the center line, which is the histogram in the middle, and the stows are at the bottom as well. And if they're tight, it's even better. And if they're aligned, if you get this perfect trade set up here on the 1-minute chart, then it's going to be a good one. Now, they're not always going to be in sync. Okay, they're not always going to be in sync. So here's the debate that we're going to address tonight. Is there only trending opportunities when they are in sync, or can you trend trade at other times? And the answer is, that's what we're going to figure out right now, because let me show you something. If you were, this is again, just like I showed you in section 5, there are different interactions, and they can all be coined as different strategies. This is one self-organizing pattern that repeats itself. Okay, so when the MACDs and the stows line up with the 1320 cross and it lines up with the 5-minute MACD and stows, I'll show you even a better one here at 11 o'clock. Here's another one, 1040. And should we wait for the 13 and 20 to cross? No, you don't have to wait for the 13 and 20 cross. And I'll explain that in a little bit, because you can get in on the gap trade and trade through the cross if you like. But here's another one that's even nicer. As you can see here at just before 11 o'clock, can you see that the 5-minute chart MACD is at the bottom with the stows, and on the 1-minute chart you see the same pattern, the perfect trade criteria, where the MACD is crossing and the stows are nice and tight. You see how tight they are, and they're moving together as opposed to, you know, kind of spread out, crisscrossing. Now, when they're tight like that, what that really tells you is that, yes, indeed, we have bottomed out and we are truly changing direction. Okay, so in my books and what we first learned is it's still a reversal. It's a counter trend strategy. It's still a counter trend per the counter trend rule books. Okay, so this part of the price action is still a counter trend. But what do we know about reversals? Reversals are a marriage between the counter trend and the trend. So they're a little bit of both. So they show you the counter trend, plus they show you the trend development, if that explains it to you. Okay, so reversals are a marriage. So as you can see, there's the counter trend plot. Starts with the gap trade. Remember, the gap trade starts here with the Linreg changing direction, HMA changing color, and we start our ascent up to the 13 EMA. So the gap trade starts there. Okay, then we move into the reversal, and what comes after that is moving into the trend. Now, the rule for the trend, as we covered with our short list last week, the trend actually officially starts when the 13 crosses another moving average. Reversal goes through the 13, causes 13 to any cross, but it can still get hung up on the 50 and 100. Yes, it can. It can still get hung up on the 50, can you see? So it's not to say that you won't suffer any heat on reversals. You know, if you got in down here at the gap trade part, you wouldn't really suffer too much heat. You might get a little bouncing around on that 13. It's not always a smooth ride, but chances are when you get this alignment with the Stows and the MACD, it's a lot smoother than others. Chances are it's a lot smoother than others. But if you get in late, you can have what's called you can get caught in the gap trade or bouncing off other moving averages before the trend really develops. But can you see how the reversal leads to the trend as it crosses the other moving averages? Now, not all reversals continue all the way up. Some stop at the 50 and go right back down. Some stop at the 100. Can you see here? And go right back down. So not all trends are going to continue for infinitum, but they at least are going to give you your desired targets on the short-term scale. And they're still pretty significant price action. So let's take a look at this a little more closely here. If you're also watching Segreta, you can just use the Stows. Yes. HMA change color. What does the HMA stand for? Whole moving average. Look in section 7 and you'll see it explained there. If you want definitions on your indicators, go to section 7 in your self-paced course. Whole moving average is just another moving average. It's a different kind of moving average, not the same as the other ones. Now, let me just clarify something. When you see, as you can see here, where the 5-minute continued, also did its reversal as opposed to a gap trade, chances are it's going to continue in the new direction. So you can also look at things like when the 5-minute does a reversal. But now, let me just show you something. So it's all very well to say that, yes, you know, we're going to do reversals when the 5-minute is overbought or oversold, right? So if we take a look at this from a 5-minute view, and here's the average person trading, let's say, between, you know, 8 o'clock and 12 o'clock. Can I show you the 3-minute as well? Yes. So let's take a look at this. This move coming down, I want you to really pay attention to this. I want you to see what's different. Here's a little counter trend, and the Stows are in the right place. Notice here's the MACD cross. Okay, here's the Stows at the bottom. They're not as clean as the other ones, but it doesn't matter. It's all the same thing. It's a 5-minute, so the 5-minute Stows are not going to be like the 1-minute necessarily. Here's a nice one at the top where the MACD is above the center line and the Stows are at the 80 line. So that's what you're looking for. You're looking for that combination where either the MACD is on the top of the center line along with the Stows on the 80 line, or the MACD is at the below the center line, the Stows are at the bottom line. And when you catch these, okay, you get nice reversals on your 1-minute chart. But now I want you to look at the time. How many of these are you going to get in a day? Well, here's one at 3 o'clock, here's one at 6:30, here's one at 9:30, and here's one at 11 o'clock. So that's 4 trades. That's if you get up at 2 in the morning. If you only trade between 8 o'clock, well, guess what? You've only got 2. So you got 2 trades in all this price action. You basically picked out 2 opportunities to trade. So there's roughly 1 every 2.5 hours. So, and chances are if you hum and haw and you miss it, well, now you only get 1. in an average morning session. So this is New York time. Yes, I'm on Eastern Standard Time on my charts. So this is 2 o'clock in the morning. So you're not going to get a whole lot of these if you're sitting around waiting for the counter trend. You know what I mean? If you're waiting for that perfect trade to give you the marriage between the gap and the new trend and the new direction. That's all very well and are we back? Yes, are we back? Are we back yet? Please let us be back. Okay, good. Yes, we're back. So everybody got the message clearly. You're not going to get a whole lot of perfect alignments for that counter trend perfect trade if you're following that 5-minute being in sync. You know, if you're lucky, you're going to have to watch more than one market to catch more than one of these. Now, the 3-minute chart is going to be very close to the 5-minute. They're going to be very close in terms of plotting. As you can see here, here's our 11 o'clock perfect trade. The 3-minute basically did the same thing. Stows at the bottom, MACD, there's your gap trade, there's your reversal. Very much the same thing. So there's not much difference. I like the 3-minute for currencies because it gets me slightly early versus late, and I prefer the 5-minute for volatile markets because you don't want to get in too early in volatile markets because you can suffer too much heat. Now, so the debate is if your reversals or your perfect trade criteria based on your 1-minute chart is one pattern in the world of trading. What is the other pattern when it comes to trending that we can focus on? So let's take a look at this. What is the other pattern? And it's going to tie very nicely together when I show you the Segredo. It's going to be very clear. So over here we can say, look, here's a nice trend trade. Okay, this is debatable. The MACDs are just crossing, so barely on the top. Some of you may have not recognized this. So we can call this a perfect trade criteria just because the MACD is crossing here through the center line. And let me just clarify something about going through the center line. This is another term that's used loosely, and a lot of people get confused about through the center line. Through the center line there's two terminologies. One terminology is when the first one that everybody learns is when the MACD goes completely through the center line like this and clears the border through the other side. Can you see that? So it doesn't always do that though. Can you see? It goes through the center line, the histogram, and clears the border and continues through the other side. Another term for clearing the center line is just when the blue part goes through it and leaves the red behind. When the blue part goes through it, you can still get the market changing direction, as you can see. And that we also call clearing the center line. So when the blue has gone through the histogram like that, we call that clearing the center line. It doesn't mean that it has to go all the way through. So please understand that, because you're going to hear this in the chat rooms and so forth, clearing the center line, and you're going to go, well, we're only just getting started through it. Okay, so, and then you're going to wonder why the market's turning on you. When I say the center line is the same as the zero line, yes, some people call this a zero line, the histogram, center line, whatever you want to call it. Okay, but basically the histogram in the MACD. So the other thing that so let's just clarify, what is a trend? Well, a trend is not always when the stows and the MACD are perfectly lined up on the overbought or the oversold side. So here we are on the oversold side, right? On this particular cross. Let me see if I can draw. So on this particular one, lining up with this rectangle, we're on the oversold side. But now, if we look at this side, if we look at this nice trend trade, you can see the MACD is going below the center line. Let's find another one where the MACD is here. How about these trend trades here coming down? Stair-stepping down. Can you see that the MACD is on the bottom? The MACD is on the bottom and the stows on the bottom, but yet we still got significant price action continuing to stair-step down. Well, guess what? These are still trend trades. According to the clear trade rules, these are still trend trades. So the trend doesn't, even though the trend may start at the top, if you miss the beginning, you can still take advantage, and I'm going to show you how to do that, of trend trades regardless of the position of the MACD. Here's another one. Notice that the MACD never made it through the center line. It's actually below the center line, and it's not coming from the top to the bottom. It's not coming from overbought to oversold. But this is still a clear trade. It's still a lot of price action on that move. So the answer is trend trades don't require only the MACDs and stows to line up. Trend trades can give you price action when they're, regardless of where the MACDs are. Here's another one. And we're going to do this, we're going to do these two on replay so you can see how to trade them. Notice here at 1020, the price action. This is a lot of price action. We went from 33.03 all the way down to 32.78. I want a piece of that action. Do I need to wait for my stows to be and my MACD to be on the top going to the bottom, or the bottom going to the top? No, I don't need to wait for that. Can I take advantage of that trend? Absolutely. It is a clear trade by definition. Is that clear? Is everybody understand that? Yes, stows can remain overbought or oversold for a while. Am I using Barbara settings for the MACD? Yes, I am. This is Barbara's template. It's actually my Mel Basic chart template with a couple of additions, but it's the same settings. Stows can float, yes. So I want you to understand that when it comes to trending, by definition, it doesn't require the MACDs and stows to be involved, to be perfectly aligned. When you include the MACD and stows, you're really actually talking about the change of direction. You're talking about the counter trend moving into the new trend direction. Okay, so let me clarify that. When you involve, and the rule is the stows have to be aligned both on the top or both on the bottom with the MACD. So both have to be on the top or both have to be on the bottom, and that aligns with your counter trend. There's your gap trade into reversal into the trend developing. So we start off as a counter trend and then we become a trend. But I can still take this trend trade. Look at this price action here. Am I going to throw this out the window and not trade it because my stows are not aligned with my MACD? Here my stows are on the top. My MACD is going through the center line. No, the answer is no. It's a trend trade. So there's two types of trend. There's one that's developing out of a counter trend, and there's one that's simply just a trend that involves 3 moving averages or more. Without the cooperation of the MACD and the stow, how do you know at the current time what you are dealing with? Well, that's a good question. So let's talk about something. Let me do this. Okay. Let me show you this. And I'll show and I'll show you on some of the times, like let's take this one for instance. Can you see this counter trend? Can you see how it trickles down? Let me use my marker so you can see this. Okay. Can you see how it trickles down? It does a nice gap trade, then we have some heat here, then it goes down for red bar, we have some more heat, down for some red, some more green. It trickles down. Can you see that the trend doesn't really have any heat? It just goes A to B, C to D, D to E. It just moves straight up. And what qualifies a trend is that it must cross a third moving average. So you've got to have the green line, the black line, plus one other color. It can be any color, but it must have one other color backing the direction of the candles. So if the candles are green, you can see from the point across, we just took off. From the point across, we gathered more momentum here, but we stopped on this moving average. Okay? So if there's no moving averages in the way, we're truly clear, we're free to go. And it's the mathematics of that equation that gives you the probability that it's going to move through and in that direction. What about the pivots? On trending, you don't have to worry so much about the pivots. When it's a true trend, you don't have to worry about the pivots. On a counter trend, you do. The only time it comes to the pivots is usually when things are petered out. So when I always tell people, when it's the start of the move, it's like the 200-meter sprint and the gun just went off. There's so much energy that it will cut through pivots like a hot knife through butter. But now, when you're getting close to the finish line, when things peter out, then you have to pay attention to pivots. So when it comes to trend trade, you can ignore the pivots when it's the beginning of something. And stay with me because I'm going to take you to the finish line. I'm going to connect a few more dots for you, and it's really going to become more clear. I just want you to get the clarifications first and follow the concepts very nicely. So let's talk about trending that doesn't align with the MACDs and STOs, because really, I just want you to understand when we talk about the MACD and STOs, that's only going to happen so often in a day, and that's really talking about the counter trend. Okay, so let's look at this one here. Let's look at 9 o'clock because it shows us a nice trend trade and it shows us a nice counter trend trade as well. Would you ever jump in on the middle of the bar if it's already off the 13? Absolutely. Absolutely, I would. In fact, the rule is you can take the next bar as well. You can take the one that's touching the 13 and you can take the very next bar to jump in on, because look at a trend trade. How many bars are there? Could you, if you got in on this bar that was off the 13, wouldn't you still make some money? Okay, so let me just I do have my chart scrunched up because I wanted you to see the cycle of the MACDs and the STOs. But let me just clarify a couple of things. So your clear trade starts at this cross with the touching candle, but you can still take the very next bar. But now this is where it gets really exciting. Just going to do this. If we're looking at the Segredo, let's look at this. Just going to get rid of the 5-minute and 3-minute for a second. Oops. Let me just move my Segredo back a little bit. Oops, sorry, gone too far. 1 second here. Messed it up. I had it nicely positioned for us. It's not cooperating. Trying to get it over here. There. Okay. So let me try to get it more to the right side of the edge for you. There you go. That's a little better. Okay, so now we have our ninja chart and we have our Sagrada chart. And what we're looking at is this from 9 o'clock, 8:58 to be exact, in this area, 8:55 to 8:58, 9 o'clock. Can you see this nice downtrend? We perfectly go, the blue oscillator shows us that we're changing direction to come down, and it comes in at 8:55. So if we look at 8:55 on the Ninja, where does 8:55 put us? It puts us on the gap trade, because you see that the 13 hasn't crossed yet, and the price is going towards the 13. The 13 is on top of the 20, so we're actually doing a gap trade. So can you see that the blue and the yellow essentially are showing you gap trades, okay, as a strategy? But they're also showing you that we're going into a reversal. When the blue and the yellow come in, they're showing you that we're going into a reversal. If you see that the HMA is crossing that 13, if you don't see that the HMA is crossing, you might get a blue, like over here. That is, what is that? It's simply a retracement. Okay, if you see that it's in the middle of green bars like that, this is simply a retracement. Okay, so one is a reversal where it'll go from blue to red, and one is in the middle where it's just giving you your retracements where it'll continue green on the next move. So let's look at this entry for a second. So here the blue bars come in on the gap trade, and then the 13 crosses, HMA is crossing here and continuing down into our trend. Then we have a little retracement long, and here's where it gets really interesting. Can you see that the midstream we have a number 1 at 909, 909, and going into number 2 and number 3. So in the middle of the trend, we have another touching candle that continues to give us price action. If we look at the price action, 33.06, and we bottomed out at 32.87. So that's a significant amount of price action in the middle of the trend. Now, if you look at the MACDs on this particular entries, can you see that your stows are at the bottom and your MACD is already through the center line? So it's not in the right place for a perfect trade entry. But we're not doing a perfect trade strategy on this. We're doing a basic trend trade strategy. And all that is required for a trend trade is not the MACDs and the stows, but simply the moving averages along with a touching candle. That is the basic requirement. Moving averages, 3 or more, and the more the better. As you can see here, we have all 5 along with a touching candle. And this I call the middle of the party. So here I'm going to give you a rule. Now, a lot of people have told me, you know, sometimes they miss this or they get in late here and then they're not sure about entering here. How many of you people have difficulty with catching the middle of the party? A lot of me's, okay? And this is where the segredo is really going to help you, because not every middle of the party, let's call this the beginning of the party where the cross is, and when it bounces for a second time, it gives us a second wave, second leg, and then sometimes you'll get a third. Notice that the third is kind of dodgy. If it's a one-directional day, you can get several, but on an average day where it's not a one-directional market, you can get the average pattern is 1, 2, and then maybe a third, which is kind of small, especially if it's near to a major barrier. Yes. Now the timing when you're looking at a technical chart can be really tricky, because you're not sure to wait for the HMA. If you wait for the HMA, it puts you into this bar. Do you wait for the Linreg 9 to cross? You know, all this can kind of get fishy. Now if you catch the high of the bar of this, you would still make money on this trade. You would still make money, okay? But ideally, you want to get in when the candle goes red. You don't want to get in on a green bar, but you want to get in when the candle's red, because then you know they're ready to take off on their second leg. Now, the segredo can really help you with this, because as you can see, if you look at the segredo, we have a number 1 here that clearly states where your entry is. There's no looking at lines and crosses and HMAs changing colors and stuff like that. So it's a lot easier to spot the middle of the party when it's the segredo, because it gives you a numerical 1. And if you catch that or the top of the number 2, you're good to go. So here's the rule that's going to help you with the segredo. When you see the blue give you the start of the trend, notice that it'll go through its cycle. When I talk about a cycle, I'm talking about the number 1 through 8. It doesn't always make it to 8. It may make it to 5 and then do its gap trade. But it does its cycle, and then it gives you some green candles before it starts the new cycle, this part here. Okay, so this is cycle number 1, and this is cycle number 2. Think of it like that. So 1 through 8 or 1 through 5, it doesn't always make it to 8, but it's still the 2 different cycles, 2 different breakouts. Now notice that number 1 usually falls on the blue. Notice that number 2 falls on the red. And you will see this happen throughout the training. Notice that here's cycle number 1 going through 8, and it falls on the yellow. Notice here's cycle number 2, and it falls on the green. So when it comes to trending, you're going to have the first part on the blue bars or the yellow bars, and the second part is going to start with the red or the green. So trending is still acceptable on the red or the green. It doesn't always have to start on the blue or the yellow. The blue and the yellow represent your reversals. Okay, so now if you are looking to time your entry, here you have the perfect timing. We don't care about the MACD and the STOs where they are, but we're looking to grab a piece of the action because we either missed the beginning or we took advantage of the beginning, but we want another opportunity because we know that the next opportunity is not going to be for another half hour or so. So we want to grab another opportunity. So as long as, here's the rule, as long as you take the first number 1 that's closest to the blue, okay, this is the first one that's on the blue. This is on the blue. The very next number 1 that's closest to this blue that's changing from blue to red, you may take it. You may not take any one after that. Okay, this will help you to avoid, and I used to do videos and things where I talked about the beginning and the middle of the party and the end of the party. And I always said, if you go back and you watch my Melanie's Cookie Cutter or Melanie's Clear Trades in the members download section, dated back to 2006, I always used to say, for trend trading, you take the beginning of the party and the middle of the party. It's always going, there's always, on every trend, it's always going to give you two really good opportunities to get in. But unless it's a one-directional day, be careful about entry number 3. That's where traders get caught. What about the one that is green candle? Now it's a gap close. Well, if you want to be a counter trend, then knock yourself out. I'm mainly focusing on the trend trade for the moment, but you can do what I recommend. This is what I recommend. Okay, and we have a rule. You never want to do the counter trend when the MACD is fat like a snake. When the trend is in full gear, it's in full gear, you see the price action is clear, you never want to do a counter trend. You rather want to wait till things are petered out and at the bottom here. So ideally, if you're looking for a good counter trend, you're not looking to do a counter trend here where the green is on the red. You rather want to do your counter trend here where we're starting to do the yellow. Okay, and the Segredo also helps you with that. In the past, people used to get caught here. They used to jump in here thinking the market's changed direction when it was just breathing, getting ready for its second leg. So this is where counter trend traders get caught, and this is where trend traders get caught. They've always got it, they miss this, they catch a little piece of that, and then they try to go for one more here, not realizing they're in the third leg already, ready to reverse. And you can see that the Segredo would keep you out of this one, because look at the time. Here we are at 9:15, between 9:15 and 9:20. Look where we are between 9:15 and 9:20. We're already in the yellow. That's already telling you, hey, even though you have some red candles, the fact that we have yellow tells us we're getting into change direction. Now, the other thing I want you to notice, 3 to 6 ticks on the first trend and 3 ticks on the middle party. You can take 6 ticks, and we're going to do this real time. We're going to do this on the replay so you can see it for yourself. Let me show you something else. What do you notice? Now, it's not so clear on the middle of the party. But what do you think is distinctive about this, the beginning of the party, the middle party, and we'll call this the end of the party? What do you think is very distinctive that stands out to you about these 3 trend trade moves? Because they are all technically trend trades. Now, these two touch the 13 really nicely. This came as close to as possible. But what really stands out to you? Who can see? The HMA and candle color don't match around 9:15. Yeah, but it does turn red, you know, after the fact. Misalignment of the LRs, yeah, that's definitely one good reason. HMA is flattening out. Yes, what else? Multiple red candles, mixed bag. Slope of the LR9, all MAs in a direction. Circle with the dot, all MAs, no. All cleared the moving averages. Yeah, these are all factors, but it's not the one thing I'm looking for that should give you the aha moment. Fresh cross, momentum on the 1320 getting really skinny. No, 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 these are good. Support. No, no, no. End of the party. What's distinctive about these 3? What is similar, or what separates these 3 entries? Touching candle MACD. Okay, I'm going to give you the answer. Nobody's got it. All right. Oh, we got 1-1. Des gets a chocolate chip cookie. Des gets a chocolate chip cookie. Okay, we got 1 winner. Here's the answer to the riddle. So pay attention here. Do you notice that on the major trend portion, the candles are below HMA color change or pushing through the HMA, but they ultimately go to the other side. So if we're going short, notice that the candles go below the HMA color change. Your best move is going to be when it's also clear the HMA. Your next best move is when it's going to go through it. Do you notice that here it doesn't clear the HMA? So the HMA along with the Lunreg is actually support. And you can say the same for the Lunreg. So those people who mentioned the Lunregs, I'll give you half a chocolate chip cookie. Okay? 2 years and not one cookie. Oh, shame, Kathy. Okay, so when you see that the price action, and this is very important because this point, for those people who are not using the Sagrada, is really going to help you. When you're looking at an opportunity, you have to ask yourself, are we below the HMA if I'm going short or above the HMA if I'm going long? This is a huge deciding factor in terms of timing. The ones that are bleeding through, if you have the trend on your side, chances are you're still going to make some price action. But if you're on the counter trend and you're bleeding through, watch out. Watch out, it will whipsaw on you. Okay? And if you're on a trend trade, if you're going smack into that HMA like that and it's the wrong color, it's green. Somebody sent me a chart today who had the same problem here. Even though the HMA changed red, it ain't south of the border. And combined with the fact that it's at the end of the party, this should be telling you, hey, look, the Linreg's on the inside. We're looking to do a reversal. I'm going to wait for the reversal and catch the reversal trade, as you can see I did here. Don't you ask yourself the following question before you enter a train? Well, are you feeling lucky? Too funny. So does that clear? Now let's connect the dots a little bit more here. One more thing. I'm going to move this over. Let's look at a 5-minute chart. Here's our 9 o'clock. Where's our 9 o'clock? Here's our 9 o'clock to 9:30. What do you notice about the 5-minute chart? Now everybody should get this right. What do you notice about the 5-minute chart? LRs are below the HMA, yes. HMA turned red. Prices through the HMA. Good, Rob, you get a cookie. Okay? So can you see that the price is also through the HMA? If we were to pull up a 3-minute chart, to 9 o'clock, 3-minute chart is going to be very similar to our 5-minute chart. Can you see that our chart? Oh, there it is. 15-minute chart. And here we are at 9 o'clock, and can you see that the price is pushing through our HMA? So in this case, because the HMA is still red, being a 15-minute chart, can you see the alignment with the 3 time frames, or 4 time frames? Okay, so I'm going to tell you right now, if you were looking for, and notice the MACDs and the stows. MACDs below the center line, stows at the bottom. So do I really care about where the MACDs and STOs are at this point? Do I really care? Because this is a trend trade. This is not a counter trend reversal trade. There's a difference. Okay, here you can say the MACD is already going through the center line, STO's already at the bottom. Do I care about this particular point? What am I trading? I'm trading the moving averages, and I am trading the alignment of my time frames. I have a universal alignment. So if you were to look at nothing else, now let me just show you one more thing. I'm going to do something really fun to really make this stand out for you. And you can do this exercise. I have a chart called a naked HMA, meaning I've taken everything off the chart that's noise, just so I can make the HMA stand out. It'll just take a second. So how do you treat the S3 in the trend? We'll come to that in a second. The S3 is always important, but we're trading to the S3. What we're looking for is when the 13 crosses the S3. So don't worry about that right now. I just want I want you to look at this price action, because this pattern is going to show up even when you're not on the S3. Okay, so we'll come to that in just a second. Is that a 14 HMA? Yes, it is. Sorry, just bear with me one second. So now it starts to be a lot clearer, doesn't it? Now you start to see where your entry point is. Here at 9 o'clock, here at 9 o'clock, you've got your 3 minute is coming down below the HMA. Your 1 minute has already done its gap trade, and it's now moving into its full trend trade. And look, between here at this point below the red pivot where the HMA's crossed it, even to the S3 pivot, 16 down to 04. If you want to take 10 ticks, there's 10 ticks for you. That's the nice thing about currencies, is they're going to give you, especially the euro. I'll tell you right now, I've been trading in the mornings, and the only market that's been really giving us some real price action, besides NG here and there, is the euro. All the other markets are heavily already approaching summer doldrums. So I know normally it's the other way around, but the euro has been performing very well, so I've been trading the euro at the moment. Let me just show you this here. Great eye training, yes. I did a class before where I talk about simplifying your charts. Now, you can have your 15-minute with everything on. So you have one chart with everything on it, or your 5-minute with everything on it. But where you're looking for your entry, maybe on your 1 and your 3, when you see the 3-minute is south of your going through your HMA, you know you have an entry. If you have an alignment, this is red, your 50-minute is at least red, and you have your 5-minute south of the HMA, your 3-minute south, you know that you have a trend trade. Is it possible to make money through the summer doldrums? Yes, but you may not get as much. You don't want to be late to anything. So even on our counter trends, here's our counter trend here at 921. If we look at our 3-minute chart, notice that the 3-minute chart is north of the HMA. So I have a new rule. I don't trade any move unless my 3-minute, not always my 5-minute, but unless my 3-minute, notice there's my entry, my 3-minute and sometimes my 5-minute, the price action is clear of the HMA. Can you see that? So I will wait if I have to wait, and this way you'll avoid this kind of noise. Can you see how the price action, especially on counter trends, is where it will really help you? Can you see how it goes green, then it goes red, and then it goes green, green, green? I missed this good trade at 920 because the HFT warnings. I was afraid large pullback price just kept going up. Um, the thing about the HFT warnings is they will come in at certain times, but they're not always going to. It's not always 100%. And any type of arrow or indicator, it's never 100%, guys. So you'll notice on my charts, I don't have all that stuff. Because what am I looking for? I'm looking for just the main body of the trend. Have you tried the simplified chart on the NG? Yes, you can do this on the NG. As long as you have one chart that shows you the lay of the land, maybe your 5 minute, you put your 5 minute on a regular chart, you know, and you have a simplified view so you can really see where's your entry. Notice I'm using the Lundreg 9 crossing the HMA, and my price action is south or north of the HMA. Now in this case, I can see the stows are aligned, so I know that I have a perfect trade there. And here I can see that I have a trend trade because the stows are not, the MACD is already below on my 3 minute chart. So when you're looking for, now on the Segredo, you're going to get the numbering system, which is going to line up very nicely. Now, there's one thing about the Segredo which I'm going to show you in relation to the 15-minute chart. Here's the rule with the Segredo. If we were to compare the 15-minute chart, if we look at this time up here from 9 o'clock, let's go to 9 o'clock over here. This happens to be already well into the trend. Can you see here? We're on a number 6. On a number 6. Going to a 7. Okay. Now, the nice thing to do is it doesn't always have to be a number 1 or 2. As long as the 15-minute is red, you still have yourself a qualified entry. But if you find that your 15-minute chart is giving you a number 1 or a 2, like here at 7:45, or better yet, here at 10:30. If we go to 10:30 on our chart, yeah, this 10 o'clock to 10:30, can you see we have a very nice downtrend to the S4. We're going from basically 33.05 all the way down to 32.78. You know, that's a lot of ticks. We're talking about 30 ticks there. So if you're looking to align the really good moves, here's a number 1 or 2. If you want to time your Segredo entries and time the 15-minute chart on a number 1 or a 2, you're going to get very nice moves. Here's the 11 o'clock, 11:15 move. Okay, notice that my 1-minute chart, clear of the HMA, 32.89 all the way up to 33.47. A lot of price action if you're trading on the number 1, number 2 on your 15-minute chart on the Segredo. But it's not to say you can't take a move that's on number 5 or number 6, as long as you have your confirmation on your lower time frame. As long as you have this, you have your number 1 and it's on the trend. As long as you have that, you're still good to go. What was the LR409? Was that my orange one is the LR9. The LR4 is always brown. The orange is always 9. Okay, so we don't want to lose too much time now. I want to show you, let's do this real time. So let's trade a couple of moves here. Let's see how much price action we can get. So I'm going to take this back to the normal template that I have, just so you can see everything. But that's a very nice picture to follow. South of the HMA, I just want that to really stand out for you. And if you watch that 3-minute, when it goes south of that HMA and it's matching your 15-minute chart, your 15-minute is also red, then you got yourself a very nice trend, regardless of where the MACDs and stows are. Should you use the 1 minute or the 3 minute chart to trade this with? Oh, you can do either. You can do both, 1 and 3. The 1 minute will show you that things are happening early, and the 3 minute will just give you the confirmation of the direction that you're looking for. But you can also get in on a 3 minute chart. So we want to talk about this entry here. We're going to do this one here at 9 o'clock. And I want to talk about this one here at 9:10. And then I want to talk about this reversal here at 9:20. And mostly this one here at 9:34. Now it is when the market opens, but let's just hypothetically, because the rule also applies at 9:34. Let me show you this. See where 9:34 is on the Sagrado? It's giving you a number 1. Okay, it's still the next cycle, the next leg closest to the yellow. So the first one, there's your cycle through 8, there's your little retracement, and then the next leg, the next number 1 that is closest to the yellow is your middle of the party. It basically says it's the middle of your party. The size of the first candle, 9:10, was too big for me to consider. 9:10. No. This one? No, this is not too big. I would if you use my execution technique, it shouldn't be a bother, because remember, this is after the fact. I'll show you. We'll show you real time. Let's show you the difference. I just want you to understand what the middle of the party is and how it's still part of the trend. And also I want you to understand that the trend doesn't always involve the MACD and the STOs. The involvement of the MACD and the STOs being overbought or oversold in a perfect alignment is actually to do with, it's a different pattern. It's a different self-organizing pattern that repeats itself, but there's lots of trend trades throughout the day. I mean, look at this. If I do this for you, let me show you this. I'll scrunch it up a little bit, and you can see okay, we just take 8 o'clock. There's lots of trend trades through the day. Here's one where the MACD and the STOs don't align. The STOs are at the bottom. Here's a nice trend trade. Okay, here's your alignment. There's your nice counter trend. Here's one where the STOs don't align. Okay, well, they more or less do. They're just squeezing through. There's your trend. Here's where the STOs and the MACD aligns. There's your counter trend. Now we're getting to a fist. You don't want to trade that. Your MACD is flat. But here again, STOs are at the bottom. MACD there. There's a nice trend trade. Now they're aligned. There's your counter trend. But here they're going through. STOs are near the top. Beautiful trend trade. So you're going to get more opportunity if you understand the difference between the trend versus the reversal, which involves the STOs and the MACD. Does that make sense? That's the main message I want you to get tonight, and the timing of that. So let's start with the replay. So I'm going to disconnect from the real market, and I'm going to connect to my replay that I already downloaded for you. All right. Can you guys hear me? I just want to make sure you guys can hear me. Awesome, idea. Okay, good. All right, so now let's start with, I'm going to, remember we're focusing on showing you the timing of your trend and your reversals here. So I'm going to use this 9 o'clock through 9:30 opportunity, okay? Now I'm not going to talk, not so much focusing on pivots right now. I'm just showing you how to use the timing of the Segredo and in relation to the advantage of trading with the Ninja as well. So you can use both or either or. So to fast forward it, just right click on the actual box and just type in the time that you want. So we'll go to 8:58 and our charts will move forward. And there's one other thing that I want to show you on the Segredo 5-minute chart, which I'll show you in just a second here, as soon as this loads. Oh, it's on the wrong month. Shoot. Forgot to do that. Yeah, that happens to if once you start doing multiple downloads, you're going to see that we're still going. My HMA is still red, my candles are still red, my oscillator is still red. We're still going for it. So your 3 minutes is actually confirming that this one is still going in the right direction on your second leg. So I'll demonstrate that in just a second. But let me just do this. I'm going to put away the 3 and the 5 minute Segredo. I'm just going to have the 1 minute Segredo because we're going to use the Ninja chart, and we're going to do these entries real time so you can see the timing of it. What do you think to trading the 30-second and the 5-minute chart? You can trade the 30-second. It's going to get you in slightly earlier than the one. You can trade the 30-second is, you know, really for scalping, for 3-tick trades. But you can. When you say the next number one closest to whatever color, are you talking about the number one on the candles or the oscillator? Both. It'll give you a number one on the oscillator as well. But I'm really talking about the number one, the red number one on the candles. That's what I'm really talking about. But the oscillator should confirm. See? That's what I'm talking about. This number one is the second leg. This number one is the second leg. And here's the blue, here's the number one. So you know that you're starting the trend there. This is this is the second leg of the trend. Look, we're going to trade it and you'll see. So we're going to follow the numbering system on the Segredo with a real-time chart. So I'm going to do this. Let me spread this out a little bit. I'll leave my 3-minute with just the HMA, my naked chart. I call it my naked chart. And here's my, don't need my 5-minute right now. And I'll put the 15-minute there for you. Okay. Okay, so you can see the 50-minute just closed the gap. So all this uptrending, we just finished the gap there. And let's get our little dome up. Now, with the dome execution, when it comes to trend trading, there's 2 types of executions. Actually, there's 3. You can either do what's called a limit order, where you place your order on the first set of numbers. So if I'm going short, I'll place my order there. If I'm going long, I'll place my order there. So in the queue, this is level 1, this is level 2, this is level 3, this is level 4, this is level 5, and 6 is the accumulation of all the levels. Now these are average numbers, they're not real, they're not the total numbers, there's more traders going on than that. So they just give you an average of volume, okay? But you don't, if you're going to do one of these trend trades like this, you're not always going to you're not always going to get filled. It's going to race off ahead of you and leave you behind. So sometimes what Barbara does for counter trends is she does what's called a level 2. So you wait for the market because she's scalping in a very tight window, And so what she's looking for is to gain that extra 2 ticks in the spread. So sometimes, because counter trends dilly-dally, they go back and forth, she'll go up, she'll let the market come back up and pick her up. It doesn't always get her. Sometimes it'll take off without her. So then she just forgets it and moves on to the next one. But most of the times on counter trends, it'll come back up and pick you up. Now, for trend trades, I say level 2 is not a good idea unless you're anticipating a move. And anticipation is not a good habit you want to get into. Because you'll notice that when the gun goes off, it just goes lower, lower, lower. The HFTs, the algos come in, and they just take off. So understand with trend trading, most of the time you're trading with the HFTs. That's the beautiful thing. HFTs are really a concern with counter trends. So the person who asked me about HFTs earlier, you're trading with the HFTs. They're coming in and they're driving the price. They're making things happen. So HFTs are really a problem with counter trends, not so much with trends. And also, the only other place where HFTs can get you is at the end of the party, when you shouldn't be trending anyway. This is where HFTs get you, right here, before we're going to reverse. Because you think it's going to be a big move and it doesn't. It whips on you. So HFTs are only a problem for trenders at the end of the party. Okay? Not here. You love HFTs here because it fills you faster. So I'm trading with the HFTs. Now, if you're counter trending here, this is a big problem because if you get in late, the HFTs come in and they kill you. So HFT activity is all about your timing and where you're entering on the trend, on the overall trend. That's where it concerns. Is everybody clear on that? Can you touch on how to manually set a stop limit order? Yeah, and unfortunately I have the wrong mouse today. I don't have my center wheel activity. But basically you would use your center wheel, like let's say I'm going short, putting my bracket order here, and I put my profit here. And by the way, when you trade like this, you don't have to pay for execution with Ninja. It's free. If you have this on none, if you put this on custom or you put it on a pre-save strategy, you have to pay Ninja $60 a month for that. But if you want the free execution, just leave it on none and do your manual entries like I'm doing, or use the chart trader. And the chart trader is this icon on the top. There's your buy and sell. Okay. Now, to do a stop, I can't show you with this mouse because my center wheel's not working on this one. It's a European mouse. Just simply use your center wheel and click here above the price because you're going short. Yeah, we're entering on the short, and we just try it out. Use your center wheel mouse up there. Make sure it's on none though in the ATM. And if your center wheel function is not a left click, you have to download your mouse software and change the settings. And it should be able to tell you how to do that when you download the software. Or surf it up on Google, surf up your mouse brand. But most mouses in America have their center wheel is a left click function. So you can left click it. If you're going long, just click away on your dome and you'll see it. It'll actually work. If you go long, if you're going long here and you put in your target there, you put your left click with your center wheel, put your cursor here and hit your center wheel, and it will put the position. The stop is the same as your exit, correct. The stop is always the same side as your exit side. It's not the same side as your buy side because then you're adding another contract. No, the stop is your same side as your exit. Okay, so moving on, let's push play here. And let's watch how things develop. See if we have enough space here. Oh, so I forgot to tell you how I execute. So what I use for my trend trade is I use the quick buttons. You see at the bottom here? And to do that, all you do is you right click and go to properties, and you'll see here where it says show quick buttons. Where is it? Show quick buttons, set it to true. Make sure you watch the DOM, setting up your DOM properties video in the FAQ on making sure your settings are right. But show quick button, set it to true, click apply and OK, and you have these quick buttons. So when I'm selling, I click sell on the bid to get in fast. It is a market order, but it's not the market order button. If you use a market order button, that says you give the power to the market to decide when to get you in, and that could be at the bottom of those big bars that you should be concerned about. But if you do sell on the bid, you're saying, get me in front of everybody else, one tick lower. So you're just giving up one tick profit. That's all you're doing. You're not paying extra. You're not losing money. You just, instead of getting in at 33.19, you're actually getting in at 33.18. You're buying on the bid price. Do you see that? That's where you're getting in on the bid price. If I click sell on the ask, I'm getting in as a limit. I could be trader number 1001 in the queue, and I may not get filled. That's the problem with the futures. If you're trading the Forex, it's not an issue. You will get filled. So over here, if I'm buying on the ask, see, I'm on the same level as the ask side. There's always a one tick difference in the spread. I'm getting at 33.19 as opposed to 33.18. If I click buy on the bid, I'm getting in as a limit order at level 1. So the ask is really a market order, but you're controlling the timing of the entry. You're saying get me in exactly at 33.19, not any other price, not 33.22, which can happen, or 33.23. Get me in at 33.19, and that's what these quick buttons are used for. So they're very useful for trending. So when it comes to big bar stuff, you'll see that you'll actually catch the middle of the bar or the beginning of the bar, and you'll still make your money. Now, for my 3-6 strategy, if you want to know how to get close to 10 ticks, you can. I also started doing a 4-6. If you want 10 ticks, I just put 2 contracts on, which you can comfortably do, and make $200 in just 2 trades. For 3-4, we're already on number 4 of the counter trend according to the Segredo, 859. Notice that my 3-minute is now south of my HMA. Hasn't changed color yet. So I may decide to get in here based on the fact that my Segredo is on a 3 or 4. But notice that we're not on the red part yet. We're only on the blue of the oscillator. So, and notice my 13 here is still crossing. See, it's only just crossing. So technically, I'm still on the counter trend. When you're on the counter trend, you may suffer a little heat. You may get a little, see the drawdown, we're 1 tick below. But now, when I go in with 2 contracts, I change my contract order to 1, and I put my first exit position at 3 ticks. Then I put my next exit position at 6 ticks. Okay, you can even do it at 7 if you like, to get 10 ticks. Okay, so you'll notice that on the first push, when the algos come in, you're going to get 3 ticks very quickly. You're going to get your 3 ticks very quickly, and then what's going to happen is, notice that we're south of the hear me now? Can you hear me now? Okay, good. So notice that basically what I said is, notice you'll get your 3 ticks very quickly as the algos come in. Then it may bounce around before it gives you your 6 ticks. But if you notice that all this time on the 3-minute chart, we're actually south of the HMA. The HMA may not have changed color yet. I don't need to wait for the HMA to change color necessarily. I just want to know that that candle's south of the HMA, because look at my 15-minute chart. My 15-minute chart HMA is red. My Linreg 9 is going parallel, and we're a red candle bouncing off the 13, and I've got the support of all the moving averages, so I know I'm on the trend. Notice that we're already at 9 o'clock now. We're on candle number 5, but we're still on the blue. What does that tell you? We're still on the blue. We're still in the trend change mode. We're not even on the red yet. So I just got the cross of this 13, basically the gap into the cross. I basically traded the reversal. Can you see the MACD's it just went through the center line, the blue part went through, now it's turning around ready to pull back. Stows are just coming down from the 80 line, and it doesn't match my 3-minute chart at all. My 3-minute chart is out of sync. So I can still trade this based on the fact that we're south of the HMA, and I'm trending with the 50-minute chart regardless of what my MACD and Stows are doing. What did you use as an entry point? Sorry, I missed that. I used the Segredo. In this particular case, I used the Segredo. The fact that we already had a number 1, 2, or 3. Here was the 3. The 3 here, I entered at 8:59. And the fact that the candle on the 3-minute chart over here at 9 o'clock was already south of the HMA, going in the right direction. So it was the combination of the Segredo plus the 3-minute, plus the 15-minute give me a red candle, bouncing off that 13. That is very hard to see too much stuff. Okay, well, if you can minimize all of this, you don't have to use all of this. You can use something like this. A Segredo number 1 matching a 3-minute HMA. That's not a lot to look at. I'm just giving you the lay of the land, but you don't have to use everything. And you can go and practice this. Now, if you watch this, whenever it comes to a pattern, you want to go practice it or look in the historical and see how many you get. So number 1 red with the blue on the bottom. Yes. The number 1 red with the blue, can you see the blue gives you a number 1 red as well on the bottom? That says the market's coming down. Blue means down, yellow means up. So blue means we're changing direction from the green. Yellow means we're changing direction from the red. Look like a great setup. Yes. Okay, so let's push play. And we'll see how long it takes to give us our 6 ticks. I notice it's going to bounce around a little bit, but notice now that my 3-minute is really, my HMA's joined the color ranks. On the 3-minute chart, it's red. My 50-minute is still red. And now, by this time, it's 9:01. At 9:01, I'm on candle number 6, and I got my first red bar at the bottom on the oscillator, on the Segredo. So that's a clue. When you see we're going from blue to red, that's a clue. That means the trend's continuing. Here we're south of the HMA, and this is, notice that this candle's starting to bleed through the HMA now. So trend is still continuing. So we're candle number 6. We're almost at our 6-tick target, or our 7-tick target actually. We're going for 7 ticks on this one. And so we'll have a total of 10 ticks. We've got 3 already, and now we're getting 7, so that gives us 10 total. And notice I'm not suffering a whole lot of heat like you would in gold and so forth. There's no, it goes down, then it goes up, and then it comes down, then it goes up. When you're trading on the trend like this, where you got a 3-minute or a 5-minute align with your 1-minute, this alignment with the HMA, you've got a consistent one direction. So there we just made 10 ticks. We made 125 on one move. We just need to find one more. So Mark, can you practice this pattern where you just line up the 3 in the Segredo or the 3 in the 1, just using the HMAs? Okay, with you notice here they got the moving averages back in the direction. And can you find 2 in a given morning? My answer to you is absolutely. And I didn't even take all there is to grab. Now look, let's see how we're going to get in on the next one. So now we're at 903. Where's 903? We're on candle number 8. So we just got filled. So now it may spike a little more, and now we'll get the 0 coming in, which means it's thinking about it. Probably get a little gap, a retracement. I like to make quite a bit more than 200. I'm not retired yet. Well, the thing is, you want to just go for a small target until you double your account. But if you have a pattern that works every time you try it, if you focus and zero in like an eagle on a specific pattern that you have confidence that works every time you try it, that's the idea here. Guess what? There's nothing stopping you from trading it with 5 contracts or 3 contracts. And suddenly your $200 just went up to $500 or $1,000. So, okay, so now the Ninja Trader is continuing to the S3. Now we would be paying attention because we don't want to trade on the S3 because it's a strong barrier. And what do we know about the S3? The market likes to bounce. So we're not going to gamble. We don't know if it's going to go through. You don't want to gamble. You want to trade to the barrier, which we already got filled. So I would be out my trade. If I was still in getting more ticks, I would be out. Regardless if it pushes through, I will be out at that S3. Because sometimes it goes through and sometimes it doesn't. You don't know what it's going to do when it's real time. So you don't gamble with what you don't know. You only trade what you know is likely to happen based on the mathematics. And as long as you have price south of the HMA, you got your moving averages, there's your nice fan, you got your nice trend trade. So now you can see the market starting to bounce. So has it penetrated the S3? No, it hasn't cleared it by 2 ticks. The top of this candle needs to be clear by 2 ticks to be considered south of the S3. So technically this S3 is still support. It's not resistance because we're still touching. Still support, so we can expect this market to bounce back up. Notice a 50-minute hit a fractal. So you got a fractal, and there's the fractal just came in with the asterisk giving you a confirmed low. And we're at 906. And 906, we are just past 0. The market's still thinking about it on Segredo. Doesn't want to go red some more. But this is not an entry. Even if here we have a red number 2, this is not an entry. Why? What does the ninja tell you? Why is it not an entry? Because we're too far from the 13. Your entry is always leaving the 13. So it has to be the touching candle or the very next bar, but not too far. So we just cleared that S3. Now we're 2 ticks below it. So technically now the S3 is resistance. There's your 2 ticks. So Now the S3 has become resistance, is no longer support, so the market could go lower. But we are sitting on a 15-minute fractal here, so chances are we're still going to bounce, and we do have an asterisk giving us a confirmed low. There's a fractal. So we can still bounce, but am I expecting the market to really change direction here? Well, it's got to get through that S3. So if I'm looking to do a gap trade, I can only trade from here to the S3. So I'm just going to speed this up a little bit because I want to move on to, I've got 4 more trades still to do. Just want to move on to the, get to the, okay, so now notice we're at 908. There's the S3. Can you see how it's still resistance? Is it necessarily going to make it to the 13th? No, we don't know for sure because that is now resistance. So now we come to the middle of the party. So if you were doing a counter trend trade here, which I don't recommend because look at the MACD. Can you see how diverged it is? It's fat. This could turn around on you in a heartbeat. And the fact that this is resistance, the window is so tight here, I wouldn't recommend it. It's not one that you want to gamble with it. Okay. Now watch when this changes over from the green back to red. Here's my red coming in, and if I look at my Segredo, can you see that I'm at 909? This is 909. My Segredo's giving me a number 1. So if I do buy on the ask, I'm at a limit order. If I do buy on the bid, I'm in right away. Okay, now I was still talking there. Most of the time you will see as this candle develops, if you entered when I first put my entry, you'll see that as this candle develops, you will get in on the middle of the bar. Now in this case, the candle, if you notice that the candle's above the HMA. So technically, I will tell you right now, in a perfect world, this is not so perfect because it's above the HMA, but my 3-minute is still south of the HMA. So in a perfect world, it's not so perfect. Sometimes it comes through very quickly. So sometimes what I'll do is I'll wait for the next bar to push through that HMA and before I make that entry. But because the Segredo gave me a number 1 and I'm on the red at the bars at the bottom, this is the only time I'm going to trade in the middle of the trend, something that's above the HMA. Notice that we got our 6 ticks already. I'm going to put this at 7. Sorry, we got our 3 ticks already, and there we just got our 10 ticks. So there we just made $250. 2 trades. Beginning of the party, middle of the party. That's all we have to do. So I'm waiting for the breathing. Yes. You must wait for the retracement to finish. Then when you see the red candle come in, that's when you enter. And the only time I would take this middle of the party that's above the HMA, you can wait for the next candle if you want, is because look at my 3-minute, look at my 15-minute. That's a great trick on the dome, yes. Going short, so why were you buying? I wasn't buying, I was shorting. Look, I just made profit if I was buying. Look, there's my entry. I was shorting. I was selling. This is where I entered on the red side. So you said buy, I meant short. Yeah, I meant short. Meaning I was buying contracts. That's all I meant. Okay, so let's do the next one. So can you see that we covered the first part on the blue is our entry for the beginning of the party, and then we covered the middle of the party using the Segredo number 1 that was on the red of the oscillator. And notice that all the time we're south of our HMA of the red. So even if on our 3-minute, if you did this picture, that would be nice. The fact that you're south of your HMA, continuing down, we're only now approaching the fractal down here, the red fractal. Notice that we have the trend continuing. I'm also very good making money on the replay, but it's impossible in real time. That's because of the adrenaline. If you can't make money in a real market, it means you haven't overcome the effects of adrenaline. And I strongly recommend that you only do 1 tick trades for about 2 weeks. So you go in and you do 1 trade a day, 1 tick, and you spend the rest of the time on the simulator. Come the next day, do 1 tick, spend the rest of the time on the simulator. Then do 2 trades, 1 tick. Do that for 2 weeks, and I assure you, you'll start to trade better. People who don't do that exercise, I've shown many examples where traders who apply that technique actually get through, and I've had traders do that for a whole month. And you'll see you'll become less fearful of pulling the trigger, and you'll start to see your charts more correctly. Because in truth be told, if you practice a pattern like this, like I'm showing you south of the HMA, using the number ones on the Segredo, you should be able to do that real time. And the fact that you can't is because you haven't overcome the effects of adrenaline. Yes, 1 tick, 1 contract per day. Yes, because when you do that for a few days in a row, you won't care about 1 tick anymore. You go, oh, that's so easy. 1 tick, that's piddly. And you will be cool, calm, and collective about pulling the trigger. The fact that you are scared when you pull the trigger means you need to do that exercise. And I don't know why, but every time I mention it, every trader thinks it doesn't apply to them. And then I still get these emails, oh, I've been stimulating for 6 months and I can't make any money. Well, the whole time, if you just did 1 tick a day, guess what? For 6 months, you would have made some money. Unless it goes against you immediately. Well, if it goes against you, then you just, get out of the trade. Excellent. All right, on to the next trade really quickly before we run out of time. You've still got a few minutes, so stay with me, guys, and I'll take your random questions. But, again, with exiting, you should have your exiting clearly defined as well. Dump and run is a good strategy. You're not going to make the mistake on every trade. I assure you of that. If you've learned your strategy well, you're not going to make the same mistake. All right, so here we are, 9:10. We're coming into our counter trend. Ooh, where's my 1-minute chart? Missing it. Notice that my HMA has changed color. Sorry, we're at 9:14 already. So we missed the, here's the gap trade.